The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 29th marvelous Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary Monday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I can make that, when we can make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, we'll go take a look at the circumstances of what the Bulls and the Bears are saying. And of course, I'm absolutely grateful for your presence here today. I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Magical Monday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 243 points. She's trading at 17,703. S&P down 29 at 2,072. NASDAQ Composite off 77 points at 5,003. Russell 2,000 off 18. The DAX managed to finish down 409 points. The FTSE off 133. Gold is not doing much. It's up $5. That's trading out 11.78. Silver's off 5 pennies. Light sweet crude is back $1.34. A lot of movement in the currency world out there. In fact, the euro has turned just slightly positive out here. Pretty amazing move inside the euro versus the U.S. dollar. Not the case with the euro versus the Japanese yen. We'll take a look at the currency pairs. We'll take a look at some of the stocks that are moving and grooving. But first, let's go see what the market is doing at 1:08 p.m. Now, the first place that we'll start, I'm just going to go down to a super intraday chart out here. Here we take a look at the opening range being that first 30 minutes of the trading session. That's the two yellow lines in my screen here. We can see that the range here broken to the downside. And what we can see right now is that the S&P futures, you're not going to see much in the way of volume. So for a market that is pushing lower out here, at least when we take a look at a 5-minute chart with regard to the futures contract, it's not pushing lower with volume. That's what we can take a look at when we take a look at last night's open inside the futures market. Of course, the futures market gapping lower based upon the grease fire that was out there. But that grease fire during that 6 to 6:05 session last evening, there were 29,000 contracts. Right now, you're at 13,000 contracts. So price is trading inside that swing point. The top of which is 2,064. As long as price stays inside that, volume or not, what you should expect is a test of that low. In fact, we go to the next session out here, the one that completed at, at 6:10 in the evening, and that was down at a price low of 2,054. Looks to me like that is the area that should be tested. Now, what's interesting also about that area, let's put this chart up on the screen, if in fact that's the way that it plays out, is that, and if you're watching this on TigerTV, I hope that you are, the top portion of my screen out here happens to be the 5-hour energy drink chart sponsored to us by the S&P 500. That's the S&P futures out there. That's the ES on the bottom portion of the screen. You're looking at the NASDAQ futures. Now, what's interesting here about the S&P futures is last night as it gapped down, we must respect that gap out there. That is a bearish sign, gap up, bullish sign, gap down, bearish sign out here. And if we take a look at it, what it also did was it formed a hammer candle. So during that first 5 hours of trading last evening, actually formed a hammer candle. Now, when we just took a look at the 5-minute chart, we saw prices moving down into that swing point with light volume, suggesting that it would go ahead and test that level. Well, if it tested, it's a hammer candle out here, and that's really important because if we do see a close below that low, which was 2,054, says if you're long, you're wrong. You know, that's the expression that you and I like to use with regard to what a hammer candle means out there, but it most certainly means lower prices coming at us, or likely lower prices coming at us, because there are some things out here that are going to say, warning Will Robinson, or expect a bounce tomorrow. And it could be a bounce or a bottom out here based upon the way that this one indicator that Stevie likes to look at that works 90% of the time out there. So it depends on what just expect it. You know, the whole key to life, folks, the ability to the ability for us to be able to anticipate is really what it's all about. That's why you and I, we take a look at these different patterns. As we just simply started out here, we started taking a look at just simply a 5-minute chart in the swing point, then take a look at volume. Then we were able to switch over to a 300-minute chart out there. See that, by the way, both for the NASDAQ and the ES Mini, it had made its fourth wave to the downside. It made bullish reversal signals. So we know that the bulls are out there that are going to try to defend those lows from last night between 6:05 and 6:10 in the evening. So that's what's going on. Just take a look at those two charts. Let's go take a look at the summation index and the price oscillators for our three friends out here. The left-hand side, that happens to be, that's the panel for the New York Stock Exchange. The center, that happens to be the NASDAQ composite. The right-hand side happens to be the Dow. You know, getting above and below that zero level out there tells you most certainly which side of the trade you should be looking at or be favoring out there. Well, we know that we saw in all three indices out here, we saw the zero level get dealt with on Thursday. I believe it was Thursday was when we saw all three in unison below that zero line. Now, in one fell swoop, in one day out here, we're seeing quite a move inside the New York Stock Exchange, as we are in all the indices out here. Now, the level of that reading inside that oscillator is minus 167 as we speak right now, which says it's getting down towards that minus 200 level. Doesn't have to hit the minus 200 level. Last time down was on June 9th, minus 188. That was another session that had followed a down session on June 8th out there. And really a similar set of parameters. In 2015, every time the New York Stock Exchange has gotten down to that level, we're not there just yet. If we see the hammer candle fail, if we see a negative close out here, and we see a push down, that's what's going to happen. That's where that springboard is going to get set out here inside the NYSE. So it's not down to a complete oversold level, a scary bottom, but it's moving down there, and I could anticipate that it would be able to get down there by 4 o'clock, because, you know, it's about three, little less than 3 hours from now. If we take a look at the NASDAQ composite, it's reading down here minus 41. Now, in 2015, the lowest low that we've seen out here, where is it? That's back here in January, down around minus 62. That set up a nice little bottom out there, nice little oversold bounce. In fact, it was a significant bottom back in January of 2015. We also saw the reading get down to this level here on April 30th, as well as on, well, April 30th, we got down to a low. We saw a lower low in price, but not a lower low in that reading back on the trading day of May the 6th out here. Not down quite as low as it needs to get, but it could easily do that by the end of the trading session. Now we take a look at the Dow, see what it's done out here. Really price damage, not a whole heck of a lot. You're trading back in towards the swing points from back here in March of 2015. Just a consolidation pattern that is going on. We're seeing its reading getting down towards that level here where a bounce would ensue. So the combination of that, along with several other indicators out there, say that is what we should anticipate out here. Just make sure you have your stops in place. So that's what's going on inside of the summation index. Let's go take a look at what's going on. We mentioned volume inside of the market. Let's go take a look at the ETF structure, try to get a feel for what's going on. Let's go take a look at the QQQ ETF series. What we know about it as we speak right now is the Qs are trading into their May 6 swing point out here. That May 6 swing point had 42 million shares. You've done 22 million shares in 9:30, 10:30, 11:30, 12:30, 1:30. That was done with my, you know, I had to count on my fingers there, nearly 4 hours into the trading session. So certainly more than almost two-thirds of the day, a little less than that, right? And so we got 22 million versus 42 million. I don't know whether, you know, it seems like it's pulling back with light volume. Now, if we were to see some major volume here, that's actually what would set up a bottom. So if you're bearish, let me tell you what you don't want. You don't want to see volume pick up inside the QQQ ETF series. If you're bearish, that is not what you want. If you are in short trades, the last thing you want on your list is to see the Qs pick up volume coming into the close. That, my friends, as you know, is a signature of a bottom, of lows out here. You know, what you and I need to always be willing to do is be able to take a look at things and take a look at them a little differently. And that's one of the things that you need to do, or I'd suggest that you do when it comes to volume, especially inside the QQQ series. We'll go back to that here maybe after we take a look at, so I'll come back to it and I'll just simply prove the point to you, although most of you already know that point anyways. You've been through this process many times before. Let's go take a look at the IWM, the Russell 2000. If we take a look what the Russell 2000 is doing here at this stage, it's back inside what we'll call the lower part of its range by breaking back below the April 15th level out here. If we take a look at retracements, by the way, volume on this here today is 19 million shares. We don't use volume the same way inside of the IWM that we do inside of the QQQ series out there. It just doesn't provide the same type of results. I know because I've tested it out here. What we have seen is we've seen a dead cat bounce, a 0.382 retracement inside of the Qs as we speak right now. That number 125.72. If this level fails, price continues lower. You're looking at a 0.618 retracement down around the 123.62 level out here. Well, we also know that's not a bullish sign, most certainly a negative sign out here, as we do see that price is below its TAS market profile support level that was created, that was established just a couple of trading sessions ago. So dead cat bounce, 0.382 retracement inside the IWM. Volume here, 19 million shares. You saw volume on Friday of 38 million shares. I think Friday might have been the rebalancing out here. So volume looks to be, you know, a little bit more than normal. If we take a look at some of the past couple of days out here, excluding Friday. If we take a look at what's going on inside of the SPY ETF, that's got 87 million shares to the downside. What is it doing out here? That's a good question. Looks to me like what it's doing is coming back and testing its swing point lower, trying to get down to that level, which would be the trading session of March 26, 2015. Looks like that, yeah, that is the swing point out here, 206.37. The bottom of that is 204.12. Now, the volume on that swing is 153 million shares. You're at 87 right now. Only if there's a doubling. And look, if you're going to get a doubling inside the SPY, then you're going to get a doubling inside of the QQQs. And as I said before, that is not what bears want to see out here. You'd like to see something a little bit more orderly and light volume, which is really what you should get in the summertime. You know, you're talking about the week before July 4th, so we've got a shortened trading week. You got a lot of people that are on vacation today. Nonetheless, it looks like the target area for the SPYs is at 206.37 mark out here. If we go take a look at what's going on inside the Dow Diamonds, 3.6 million shares, the downside off a couple of bucks. Looks like it's testing its 200-day exponential moving average. That happens to be priced out at 176.45. The actual low so far today is 176.58. When we get back from this break, well, what it's doing is testing its March 26 swing point as well. That's got 6 million shares, 6.6 million shares. No, looks like it could be coming into that swing light. Nonetheless, it's still inside it. This is Steve Rhodes with TFNN. Be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 224. S&P is down 27 points. If we go take a look at, so I mentioned volume out here, so let me show you this. Several years ago, I started to track volume differently because it wasn't working the way that both you and I have been taught. Here happens to be a chart of the QQQs. Well, I can't say, well, I don't know how you've been taught, but just simply the way that I had used volume in the past. And what I then started noticing was I started taking a chart like this out here. Let me see if I can get back far enough out here. I started taking a look at from 2009 forwards, from that low of March of 2009 forward. So I'm just trying to get out here and started looking at volume. And so if you just take a look at from March 2009 forward, the actual single largest volume day out here, 1 and 2, happened to be during the flash crash, May 6th and May 7th out there. And what that did was that set up a nice bottom inside of the market out here. In fact, let me see if I can pull this like this out here. You know, we can see as those levels, the actual level never got tested out here, the actual low of that swing point. And that has to make you say, something to think about. Now, look, the mere fact of one event out here, that's not going to make you, totally say, something to think about. But then I started taking a look at, number 3, number 4, number 5. You've got a nice cluster of candles, by the way, back in 2010 that had formed a nice low. And this is just simply going back from simply the bottom in 2009 forward, taking a look at it that way. We can see out here, this is back in the time period. Let me try to widen up just a bit on my screen, make it a little bit easier for you to see. Back here during that August 2011 timeframe, the market, I don't remember what was going on back there. It was something that had to do with Europe. So kind of interesting. We're really at the same time period here, right? This was an even bigger issue than Greece. I mean, come on, my goodness here. Greece is a speck. Now, I love Greece because, I own an island over there. It's called, you may have visited, it's called Rhodes, just like my last name out there. So Greece is, so upa, next to sashimi out there, it's my second favorite food. There's nothing like a good piece of saganaki, a little flaming cheese out there, and some really, really good tzatziki. It's got to be really good. Most people have never really had the good stuff out there. Some nice fresh bread in that and a cold brew. There's nothing better than that. In any event, let's get back to the QQQ series ETF out here. You can see a huge cluster of, and this is just simply, we're talking about 1,590 trading days. That's including today. That's still days 6, 13, 11, and 15. High volume days out here formed that bottom back in August of 2011. Very significant price area. Those lows, actually were not completely tested. We got down similar to back in October of 2011. Of course, we know the market makes bottoms in October out here. So just simply, I'm just showing you, just fast forwarding, because there are ways to use the Qs totally different than anything that you'd use in the past. Well, then we started talking about, hey, the market's going up on light volume, right? Compared to what? Right? That's like somebody coming to you and say, hey, I can buy this for 50% off. Wouldn't you say 50% off of what? Right? So it's really all about correlations. When you start taking a look at volume, and the correlation that you look at is how is it during the last 12 months, and you can do a running cycle. This is easy stuff to do. You can do this in a spreadsheet. You can do it yourself, so you can understand where volume ranks out here. And just so simply, like I say, you go apply this to the IWM, do the same type of thing. You're not going to see the same pattern out here as you do in the Qs. So I'm giving you something that's worth millions. Of course, depending on what you trade, it just may be worth thousands. But hey, let's not lick a gift horse in the mouth out here. Now, let me try to fast forward to today, because what I'm really, I don't know what the heck I did there. There we go. We're back. Okay. Now, if you take a look at 2014, just as an example, those are going to be the blue colors on my screen out here. If we take a look at 2014, the largest volume day of 2014, that took place right here. That was on April 4th. 2014. Now, that day itself did not go ahead and form the bottom. It was actually the fifth highest trading session. It was just a few days later. Fifth highest trading session of 2014 that actually did. That was back on April 15, 2014. The market has not looked back. So you had a nice little cluster of volume down there. No different, quite frankly, than we had back here in October of 2014 when the market made that significant low, that significant bottom. And of course, if we take a look at where the market's trading to now compared to that low out here, we're not anywhere near it. Nor in the Qs is price going to get anywhere near it out here. It's just the pattern that has been out there. It's been out there for years. Now, I'm not saying that the pattern can't change, but what you and I need to do is go with the patterns that are out here inside of the market. And if you take a look at 2015, it's just shaping up the way that 2014 did. Highest volume day of the year, January 6th, little cluster back here, day 2nd and day 4 of volume back in January 2015. Take a look at those nice lows out there. Yep. Folks, you see a volume day, somewhere around 51 million shares. You're at 23 right now. That's going to tell you a low is forthcoming inside of the QQQ series. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Dow's off 228. The S&P is down 28 points out here. What a nice gift from the Greek gods last night. I was short. Newsletter subscribers were short. We went ahead and took our profits this morning. And so we're neutral. And the reason that we did that is because there's another bottom that's being formed inside the market. Those of you that have been here for a long time and listening to my calls, certainly over the last year, you know that back in October in 2000, during the Ebola scare, which was a heck of a lot scarier than Greece not making their payment to the IMF. I mean, come on, Christine Lagarde, give me a break out there. You know, and hey, it's a bummer. For sure, you know, these folks trying to get their money out, what's going on currency-wise out there. But that's kind of interesting with regard to gold, right? Gold hasn't moved, hasn't done diddly out here in the face of fear out there. So you got a problem in Puerto Rico with regard to debt. Neither of those two events are going to cause any substantial problem. It's what it's doing. It's setting up that little scary bottom buying opportunity. I wasn't really sure how we were going to get there. You know, you like to see those events back in January. January, when the markets were moving lower, I suggested to you that the markets were going to form another bottom out there, and that's what they've done. Now, it didn't come in January; it came in on February 2nd out there. If we take a look at I think it was the Dow or what have you, and so the market is just getting ready, just preparing itself for the next bottom. Now, I don't know that it's going to be today. I do know we're going to see a bounce within 48 hours. That's clear, and it's bounce or bottom out here. So I just have to do some additional assessing. Part of that assessing certainly is going to be taking a look at what's going on inside of the currency pairs out here. So I've just given you now what I'd really love to see. I want to see that volume come into the Qs. I want to see it expand big time out there, because what I know is you can go back to 2009. You can go back for 5 years out here, and what you're going to find is you're going to find what I found. Now, it doesn't necessarily happen to the day, but it happens really darn close to the day. This is really all about being able to build a position, is it not? Likewise, I'll be disappointed if it's just light volume out here, because it'll be saying to me, at least with regard to that one indicator, and I'm just not just looking at one indicator to give me these signals out here, but I like the fact that everybody is uncertain out there, uncertain to everybody being on the short side of the trade. That's a beautiful setup, right? So now we just need a couple of things to take place for us. Now, it's interesting here. We take a look at the Euro-Japanese yen currency pair, and you talk about a currency pair that's way off of its session lows out here. So gapping down big, huge last night, getting into its most recent swing point out here on May 26th. Still has that gap that's out there, but really off of its session lows in a big way out here. What the market needs as wind at its back is for this currency pair to move higher out here. So what we know as far as last night and today, this currency pair has actually been moving higher. Our markets have been moving lower. That's a divergence worth paying attention to. It's not one necessarily worth taking a trade on. You want to go ahead and see other elements out there. Just take a look at the euro versus the U.S. dollar index. This has been pretty amazing. We talked about this little rising price channel out here. That's the yellow diagonal lines from lower left to upper right, sort of upper right. Really, it's really center right out here. Nonetheless, it still is a bit of a rising price channel. Price gap down last night, gap down below that level. Right now, you're trading right back inside the rising price channel. It's as if there's no problem with the euro out here. Now, we can blame it on, or we can say, hey, it's all because you've got Mario Draghi and others that are out there buying the euro. I don't know what it is. What I do know is that a level of support most certainly has held. Look, likewise, there's levels of support that are not holding right now. So Stevie could be dead wrong with regard to the market finding a bottom out here. All right, so I'll go with that. It's not going to be the first time that I'm going to be dead wrong, and it's not going to be the last time. However, I don't believe that that's the case, but that's just my, well, I'm going to go to a different chart. The New York Stock Exchange out here is trading below its swing point from the trading day of June 9th. So that bottom might come in after the completion of an A to B equals CD pattern. What would that look like out here? Let me see. Where do I go? Primary. Here it is. Okay, so here's the New York Stock Exchange, which, by the way, it's trading below its point 618 retracement level. But let's get rid of that. We don't need that. Let's target. Well, let's leave it out here. That target would be 10786.53. A Gartley buy pattern, another Gartley buy pattern. There was one that formed out here at the point 618, had a nice move. Remember, all Gartley patterns have 5 potential outcomes. This one fulfilled 3 of those 5, so that's a pretty good deal out there. If we take a look at this potential A to B equals CD down pattern, so this is another area for us to be paying attention to. That A to B equals CD pattern would look something like this out here. See if I can get these numbers just about right. That'll take you right down to the 0.786 retracement level. That would take you to about 10,798.76 and 10,786.53. That happens to be your 0.786 retracement. So should the New York Stock Exchange get down there, ideally I'd like to see that happen. Maybe it happens tomorrow. And then, because I know of the bounce or bottom we get within 48 hours, that would be a nice buyable bottom out there. But you got to take things one thing at a time. A lot of times, you get these gifts out here, but they don't always gift wrap them. And that's why you and I, we've got to go searching around looking for some clues inside of the market out here. But that's a pattern that could absolutely occur inside of the New York Stock Exchange. So that combined with taking a look at the summation index, really the price oscillators, which have been giving us really good signals out there, is something for you and I to pay attention to. If we take a look at gold priced in euros out here, if I look at gold priced in euros versus U.S. dollar, the bottom chart here is the euros. You can see that's way off of its session high out here. In fact, all the gold has done is sold off. So if the real, which I believe the real fear with regard to gold as a fear currency, should be coming from Europe. That's not panning out. And that's why it's really not panning out and playing out inside the U.S., the gold priced in U.S. dollars out here. You know, you don't see another bottom until probably about 1,000 euros. You're at 1,052. So that could be in the cards. Or you don't see another bottom probably till you're around the 1155-ish area inside of gold. And that's just simply a little trend line out there. So not a whole lot of interest with regard to those metals from a trade, unless you're an intraday trader out here. If we take a look at what do I want to take a look at next out here during this 8 minutes, just surfing around, see what I've got on my screen, because I sort of just do this, just simply get it on there, necessarily plan out what we're going to take a look at here during the show. We did take a look at the currency pairs. Not a ton going on, I don't think, inside the Great British Pound. Let's take a look at it. Yeah, it was basically unfazed by everything going on last night in Greece out here. So not a ton of movement, nothing there for us to really focus in on and pay attention to. Light sweet crude, let's take a look at that. That's back $1.20. Let's look at light sweet crude and natural gas out there for Rich in Orlando, in case he's listening in, because he trades the natural gas. If we take a look at light sweet crude, really just trading inside this little consolidation. It's market profile. The low of which is 57.77. That likely will hold that support. You're trading at 58.42. Not a ton really going on out there. With regard to natural gas, up 7 pennies right now. You know, and if I got to put this on, I think it was a 30-minute chart. We know there were some hammer candles out there. Those hammer candles are really worth paying attention to, especially when you're coming back towards retracement levels. So when we were on the line, I think Friday might have been on Friday with Rich, we were taking a look at these two hammer candles, by the way. I can see another one. Boy, natural gas is just telling us that it is, even though we're in that unfavorable seasonal cycle, which begins in June, ends in September, early part of September, this 273 area, you got one hammer, that's the 30-minute chart, by the way, one at about 2 p.m., 2 to 2:30, June 23rd, another one, June 24th, between 4 a.m. and 4:30, another hammer candle out here. This was on Sunday evening. You had a nice hammer out there. Looks like you probably have one or two more along the lows out here. Looks like around 11:30 or midnight and right around 1:30 to 2. And so, man, if that is not an area that is... Now, the benefit there, if you're trading natural gas, is you know that there are buyers that are really trying to protect that level. So if that gives way, then you know that that's an important element. That's just like when we came back and took a look. Well, let's take a look at the Dow chart. We looked at the ES Mini, and it had formed a hammer candle. Inside the Dow on the 5-hour chart, it too formed a hammer candle. Now, it's not really the most ideal hammer candle. And the reason is because you got to fill in this gap out here. So remember, gaps are your friends. And really, even though visually we don't take a look at it, you look at this hammer candle, but you and I know it's suspect. And it's suspect because if we really take a look at the close from Friday, fill that in out here, it doesn't qualify as a hammer candle at all. Nonetheless, we'll still use it as an important area for us to pay attention to get a clue as to whether there's another notch down, another leg down inside of the charts. Now, we may not see that during today's trading session. It may take place in the evening when China gets on board. But nonetheless, if we see some closes below those levels, and that A to B equals CD pattern of the New York Stock Exchange likely becomes a fulfilling prophecy out there. So let's take a look at the, what do I want to take a look? Well, let's look at a couple of things that are moving inside the market. Let's look at what's moving to the upside that is bullish out here. Can we find a stock? Alder Biopharma is up 4.5%. The rest are inverse ETFs, I believe, that we take a look at, so there's no reason for us to do that. Oh, Amphenol Corp, APH, is the ticker symbol. What's the news behind it? Binding offer to buy, so it's going to buy, looks like it's buying something out, but let me take a look at this daily chart out here. Let's put that up on the screen. Nonetheless, this thing is behaving pretty well, but, you know, buyout news. Let's move on to something else, see if there's something that's not buyout news related. Amphenol Corp, what's behind that? Amphenol, it's entered an exclusive. Oh, maybe that was, no, Alder Pharmaceuticals. Sorry about that. Alder Pharmaceuticals. Okay. I don't see any news behind it. Let's take a look at this. This thing, wow, this thing had some nice volume. It's interesting. Big volume on it on the trading day of Friday. I don't know why. Don't know why. Maybe this said, I don't know. I'm really not sure. Maybe somebody out there knows. 5.7 million shares out here. Nonetheless, what we do know about this equity, on its daily basis, it's held support. Its TAS market profiles out there. So that's nice. Trying to get above resistance. Let's take a look at it on a weekly chart out here. But this looks pretty good. On a weekly chart, looks like this thing just dates back into May of 2014 out here. So A to B equals CD patterns, the one on a weekly basis that we could look at out here just to get a feel for where this thing is at. Let's try to do that. Come on, work with me here. There's your A point, your B point out here. Looks like January 5th, and your C point April 27th. So it's done the 1 to 1.272. Any move above 49.26 probably brings 57 bucks into change. 57.50 would be its target out there. That is ticker symbol APH. Worth noting and looking into and taking a look at. LifePoint Hospitals, LPNT. That's having a decent day out here. I don't see any news behind it. This thing had a big volume day. Well, maybe that was because of the Supreme Court ruling on Friday. Nonetheless, this thing is cleared any kind of resistance out here. In fact, it took out a B point, which had 3.8 million shares with 4.5. So now you've got a confirmed AB equals CD to the upside inside of this equity. On the conservative side, if you went just with the conservative A to B equals CD here, let's go see what that would be. We'll give you the conservative numbers. I would say you could really take something that would be much more aggressive than what I'm giving you here, but let's just take it. It says 88.74 to 95.76 likely becomes the target. That's the upside. Let's take a look at some things that are breaking down. Let's go see what kind of breakdowns they've got in store. Priceline here. Now, Priceline's been trading inside of a trading range. Let's go see if it's broken through that level. Let's take a look at the daily chart. That's what really showed it. There was a gap up, a sign of strength. So right now, Priceline has moved into that sign of strength out here. Let's see what kind of volume. That sign of strength inside Priceline had volume of 2.6 million shares. You're down with 445. How about that? There's another small gap out here inside of Priceline, which is right at about the 1108.50 level. The actual, you're trading at 1109.32. The low 1108.70 out here. So Priceline is trying to find its legs. It's coming back into a breakout area with light volume. Does that make it a buy? No, it doesn't make it a buy. You'd like to see some kind of reversal out here because it certainly can't continue to head lower. Now, what Priceline also has a problem with is it's got a supply line at the price level of 1227.89. Nonetheless, that might be a good risk-reward trade when the market turns out here because this most certainly is pulling back with light volume. Number one dollar leader to the downside out here. LinkedIn, LNKD, this thing had a real problem months ago. It's down 11 bucks and change out here. It is trading back into that day that it really fell out of bed. That was on May Day, May 1st. 16.8 million shares to the downside. It had a little bit of a breakout back on June 3rd, 4.2 million shares. You're down today with 1.6, but nonetheless, it's below that close out here. Looks like Priceline probably headed back to these lows in the 191 area, trading at 204.32. That's number two dollar-wise to the downside. AutoZone is number three. That's off 11 bucks. I don't see any news behind it. What is it doing out here? AutoZone. Can we see what this is doing? What is this doing out here? Can I get a read on it? I can't really get a great read from the daily. Let's try the weekly chart for AutoZone out here. Doesn't look too shabby. Looks like a continued pullback to 654 is warranted, maybe even 637.28. When we take a look at AutoZone, maybe that is its trading range out there. AZO is its ticker symbol. We've got the Dow down 231, S&P off 28, Composite off 78. Volume inside the queues, only 24 million shares out there. Come on, all you sellers inside the queues. Let's get that volume cooking out there. Let's get it cooking so that we set up a nice, juicy bottom for the rest of the summer. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 237, S&P's down about 30, Composite off 82 points, Russell's down 20. Don't forget, were very few people on Stevie's side back in October when I told you that the market was going to form a bottom. And even fewer, believe it or not, back in January as the market started moving lower. Of course, you had all those people, you know, as the first 3 days of January goes and the month of January and all that hocus pocus, dominocus out there. But that didn't turn out. And now you've had me calling for the market to find a bottom. That's going to be, and not just find a bottom out here, but you're going to see the market zoom, zoom, zoom. It's going to take out the highs. Now, how many people out there are calling for that you're listening to? And I may be in that lonely camp of Camp Run Amok, but I don't think so. And so that's, there's certain things to be looking for. There are some extraordinary tools that I share with subscribers, tools that I don't share with you during the radio show. They're paid clients, and they should have access to this stuff. It's a different way to look at the market. I would suggest that if you only look at the market one way, you're only going to see one picture out there. That's why I went through that process of taking a look at volume and then going ahead and breaking it down, taking a look at on a 12-month calendar basis or do it on a 12-month running cycle, whichever way it is you want to do it. You're going to find the same type of results out there. So always be willing to step back, take a look at a chart, see what patterns are out there, because if you do that, you're going to, in fact, always look for it's good to take one side of the trade and then come back and take a look at the other side of the trade. The most basic thing that I learned at a Harvard Business School that was sponsored by IBM. That's how Watson, not the computer, but the real think tank behind it, used to do it. And that's how IBM, maybe they're not doing it anymore out there. They really need to. But if I learned anything, if you're trying to close a deal, you're trying to get something out there, put everything in place, and then step back and take a look at it and figure out why you lost the deal. That means take a look at the other side. What is it that you didn't anticipate? Because that's really that's all that you and I can do is really anticipate. The market has these patterns out here. That's the most cool thing. You just have to be able to find out what that pattern is, and sometimes it's a newer pattern. And I promise you, if you use that QQQ series ETF and the volume out there, and you use it a new way, a different way, it's going to. And when that changes, we'll know. We'll see that thing change. But it's been like that for 5-6 years. It's been really rock solid during the last couple of years out here. I expect that it's going to be the same, and that's going to be one of the things. We'll look for that gift. I was hoping that it was going to be the gift from the Greek gods. Now we would see just volume explode today. It would have been perfect with regard to some other timing models. But so far that hasn't happened, and it doesn't look like it is. Of course, volume could explode during the last few minutes out there. Dark pools and all. 25 million shares right now to the downside. That's not a ton of volume inside of the QQQ series out here. With regard to what else is going on in the long-term trend, here's the New York Stock Exchange. We took a look at a potential A to B equals CD to the downside. Here's your weekly chart out here. Shows you really not much in the way of damage inside the NYSE. You take a look at the trend. There are really two trend lines on my system. You've got the March trend line. That's the lower white diagonal line. You've got the trend line coming off of the October 2011 time frame. Those trends are still intact. Last time we saw that trend get tackled was back during the Ebola scare. Maybe it's going to be the grease fire at a price point on the weekly chart of right around the 10,795-ish area out there. We'll see if the sellers can get price down to that level. Maybe that's the area that forms that nice bottom, both on a weekly as well as on the daily when we took a look at those price oscillators out there. So, folks, stay tuned. Our lovable, squeezably soft David White is up next. It is Magical and Marvelous Monday. That means we've got the Tom O'Brien Show from 3 to 5. Have a great Monday. I look forward to seeing you tomorrow afternoon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.